My presentation today is how to get to yes. How do you get to yes in selling your company for an optimal outcome? An optimal outcome is highest price, best structure, minimal taxes and liabilities, and maximized employment agreements. How do you get to yes? It's simple. Learn to say no. Several years ago, at the end of presenting a selling out M&A boot camp, a CEO from the audience asked me confidentially if we could help him with an unsolicited offer from a British strategic buyer. They wanted to explore the purchase of his vertical market software company for as much as $25 million, and they wanted to exclusively negotiate. That was big money in those days. He asked if Corum could do a valuation to justify the highest possible price and negotiate the deal. He'd been impressed with our conference, and he'd pay our regular fees. I politely turned him down. He was surprised. It was one of the hardest no's I ever said. But this wasn't our mission statement. Our clients should be able to say no more than yes, as our goal is to get them multiple offers. I explained that Corum was founded by former tech CEOs who had sold their own company to help fellow CEOs get the maximum value, the optimal outcome. And what he wanted to do was just wrong. A traditional investment bank would jump at the chance to represent him, but he wouldn't get what he's worth, what he deserved. First, statistically, unsolicited offers only result in a deal 11% of the time. Too often the buyers are picking your brain, looking for ways to compete. More importantly, no one has ever gotten an optimal outcome only dealing with one bidder. Further, most brokers talk about doing a valuation, but that's not what creates the final value. That is done through price discovery, by creating buyer tension through a professional global search, a process that includes not just strategic buyers, but financial bidders. I emphasize the process included proper preparation and research to get them to the right buyers with the right message, and through due diligence, which is where most deals die. He said he totally understood that kind of laser focus. That's why he had been successful in building his software company. Except that his partner, who hadn't been to the conference that day, wanted to just accept this offer. Jeez. I wished him luck. What do you think happened? Several months later, he called me with an opening statement, something like, "I can't believe, Bruce, you walked away from what would have been $1 million fee." That impressed me. He said he thought it would be easy, but trying to complete the deal was a full-time job for him, more complicated than he thought. And he was worn out by the due diligence, not having any leverage in the negotiations. Long story short, we agreed to take him out. We got 4 offers, the lowest being at $40 million valuation based on a minority investment from a PE firm. The next offer, up a bit more, was just under $60 million, a recapitalization for majority control. That's where they put some new cash in, buy out some of the other shareholders, rework the cap table. The highest offer was for $80 million from a strategic buyer, but it was an unregistered stock, which was risky. He and his partner settled on an offer of $72 million, all cash. None of these final offers were from the original bidder, who, as it turned out, was a bottom feeder trying to buy them cheap. So what about today's market? Well, good news. There are more buyers than ever, with over $6 trillion to invest or acquire worldwide. They're hungry to get their money deployed before the value is eroded by inflation. We are seeing more offers than ever, most for cash, for 100% acquisition. This is no time to hunker down and not be in the market. Now, not surprisingly, there are more unsolicited offers than ever. We get calls every day. I'm still stunned by how many company owners will invest years of their life, even decades, then take the first offer. How do you get to yes? It's simple. Learn to say no.